just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Shah and you're watching Indian Open. Let's go straight to the headlines. US President Donald Trump announces a new trade accord with Mexico, which will replace the NAFTA, invites Canada to join the deal soon. Fuel costs, pricing pressure and a forex loss forces Jet Airways to report a higher loss than expected. The Finance Ministry may begin discussions with the banking regulator under Section 7 of the RBI Act to see if a special dispensation can be granted to the stressed power assets. And 20-year-old Neeraj Chopra became the first athletics gold medalist at the Asian Games in 60 years after making a national record at the javelin throw. Yes, quite frankly, that was the highlight, and the national anthem out there was really the highlight of the day yesterday. However, from an Indian perspective at least, let's take a look at the trade setup for the day. It promises to be a mixed bag, though the handover from the world market seemed to be okay. The roundup of the global news flow, as our headline stated, US and Mexico have closed a new trade deal. They have but Donald Trump has said that it won't be termed as NAFTA. They've of course invited Canada to join in as well. So this is that one big factor that happened in trade yesterday, which led to a gain in the Mexican peso, and world markets by and large were buoyant as a result of this piece of news. Another piece of news, Warren Buffett's Berkshire Hathaway and Warren Buffett agreed to back Paytm. This was made official last evening at about 8 p.m. India time, and that confirms a piece of news that I think 2 or 3 media houses in India, including Bloomberg Quint, reported. So all of that led to the world markets doing rather well for themselves in trade yesterday. The S&P, Dow, Nasdaq closed at fairly decent levels, and I think we're taking away the cues as well. In fact, just look at the uptick that we're seeing in the world markets. There are concerns that are coming in, and the camps are divided on either side. If we had Michael Every talking about some caution yesterday morning, we had Mark Matthews come in and say that despite the reservations of certain sector of market men about what's the kind of growth that will come in the US markets, he doesn't see any immediate downside to the world markets. And therefore, the merry ways continued, of course, in trade yesterday. Interestingly, though, if you look at what the kind of trade pattern that we're seeing in the world markets and possibly in the Indian markets as well, while the indices are closing at record highs, there is less momentum than the kind of momentum that existed in the early half of the current calendar, both in the US markets and the Indian markets as well, arguably, but the US markets for sure. That chart quietly shows you this particular trait, that the number of stocks which are moving on and touching high levels on volumes in order to lead the index higher has come off from what it was in the month of January, late January, not early February to be honest, just late January. And it just shows the nature of the rally in the US markets, and arguably the nature of the rally in a bunch of other markets too. We did this study, I think, a couple of months ago, which also showed the kind of stocks and the kind of weightage that select stocks in the US, the UK markets and select markets were having on the rallies in those respective markets. Even in India, I mean, the select sector of stocks which are actually doing well, just that the last 1.5 odd months, there has been a bit of rotation, but otherwise, by and large, if you look at YTD, it's a select band of 3, 4, 5, 6 names which have led to the rally, and our market's hitting new highs as well. So what's happening in the mother market is kind of getting reflected in the other world markets as well. For our markets, it was a strong day of trade. Momentum likely to continue if the world markets are to be believed. Option traders are now betting on 11,700 as an expiry if the option levels are to be looked at. And the Nifty Bank, to my mind, is the key pivot until expiry. We've seen buying at the lower levels the last couple of days. There's been some bit of buying that we've seen on the Nifty Bank. The question mark only is, can this continue? And if it does, then there's no reason to believe that this up move that we're seeing will not continue. Flows were positive too. Yesterday, for example, for the first time, Bank Julius Baer came in and said that they are seeing their clients not being averse to own India because they believe India is a must-own on a long-term portfolio. The last 1 month, save for a few days, we have seen the return of foreign money. Yesterday, another example, 11,000 1100 odd crores FI money, DI money coming in. FI is putting in about 252 crores. Not bad day from a flows perspective. A slightly tough day from a rupee perspective though. That continued to grind lower, and despite a good brisk start, the currency depreciated during the course of the day and hit record closing lows of 70.16 to the dollar, down about 0.4%. However, amidst all of this macro and the cues, what are the stocks that one should watch out for? Well, I believe the power companies, beleaguered as they may be, maybe there could be some more pressure on some of these names. JP anyways was down about 10%. Adani Power had news of its own as well in yesterday's session. The highly leveraged company is going to add on for the leverage because it will take on projects of GMR. Interesting to see. We'll talk about that a bit later on. It's a Bloomberg news story. We'll talk about that. Jet Airways, and the pain was a bit more than what people would have anticipated. So a weak quarter. Revenues were up 6.4%, marginally at that, but an EBITDA loss of 382 crores, margins negative 6.3%, a net loss of 1323 crores. So not a good quarter. Again, I won't dwell too much on it right now because Somit will come in and talk about it. So stay tuned for that. But yeah, a weak quarter for Jet Airways. Wonder if there is more pain in store. JBF Industries, interesting one. The board has approved the debt restructuring plan for a subsidiary, which is JBF Petro. What this would effectively do is the total debt of about $450 odd million, which belongs to the subsidiary, will now not be consolidated in the parent's books here on. Interesting. Let's see if that reacts. And yesterday, the stock of Orient Refractories, we should pull that one up as well, was up about 13-14% in trade. The promoter has sold part stake in the stock and sent it out to two mutual funds. So HDFC Trustee Company, which is HDFC Small Cap Fund, acquired 13 lakh shares. L&T Mutual Fund acquired about 23 lakh shares. So fund activity in this one as well. Interesting to see what happens to Orient Refractories. It's a small company, but the volumes were thick yesterday, and now you know why. Let's wait and watch if there's further reaction. So these are a few stocks that I think could see a bit of a reaction early morning. However, what's lined up on first word today, that's the key thing. Lots happening in the stress power space, be it the Allahabad High Court order. The government is looking to step in, lenders looking to take some of the assets into insolvency, or a deal is in the works. We get you a complete roundup with Vishwanath and George Smith Alexander. Jet Airways has to do a lot more than just cut costs if it has to turn around. Samit Sarkar joins in with the numbers. Jayesh then comes in to give us a glimpse of the revised earnings estimates after the first quarter numbers. Select companies wherein either the numbers have been taken up or down. And then Darshan joins in to tell us why Dr. Lal, Path Labs and Thyrocare are treading on a different path this year. However, to the big news of the day that broke late post-market hours yesterday, not really late evening, the Allahabad High Court has refused to grant any interim relief for stressed power assets. The High Court also allowed individual power companies to seek relief after disclosing all the facts, reads the order. Lenders are now allowed to take these accounts to the NCLT to kickstart the resolution process. Meanwhile, the Finance Ministry has said that they are now looking to begin a consultation process with the banking regulator, according to PTI. The government will use Section 7 of the RBI Act, which allows the centre to direct the RBI on matters of public importance if it does choose to instruct the RBI. Not all are happy with this move, though. The former RBI Deputy Governor S.S. Mundra saying the centre cannot suddenly come up and say that the RBI should not exercise its power after it passed the IBC and gave the regulator the power to take such a decision. Meanwhile, RBI's February 12th circular has thrown up 63 stress accounts on State Bank of India's books as well, a large chunk which comes from the power sector. A senior official told Bloomberg Quint that only 12 of these are likely to be resolved outside the NCLT. So lots happened in the last, 12 or 18 odd hours. Let's get in our editorial bandwidth out here to talk about this. Vishwanath Nair first Johnson with the details. Vishi, good morning to you yet again.
Good morning, Neeraj. So we discussed this yesterday about the assets that are going to go to the NCLT, not going to go to the NCLT. Bit of a confusion there. But what this official from SBI has confirmed, and there's a senior official there, that about 63 accounts, that's the list that SBI is working with. These are most of the stressed assets that are there in the system, which were identified as part of the February 12th circular, and for which August 27th was the last day of that 180-day period. Of these 63, about 40 accounts are from the non-power segment, while 23 are from the power segment, even though the power weightage is higher. And overall, if you put all of these accounts together, only about 12 accounts, 7 in power and 5 in the non-power group, only 12 accounts are being resolved outside the NCLT, while the remaining have either been already referred and admitted or are in the process of going to the NCLT in the coming few weeks. A few questions there because of this news break. You need to ask is whether the banking system at this point in time is capable of arriving at resolution plans within a short frame of time. The RBI gave them 6 months to resolve these assets, failing which they would go to the NCLT. Banks have not been able to find any resolution plans or have not been able to come together to even discuss something of this nature. This throws up important questions when you look at something like Project Sashakt, which the aim of which is to bring bankers together and pass decisions in a short frame of time. If they've not been able to do it in 6 months for crucial assets, I don't know, and this is something analysts have also pointed out, that they're not sure if this system will be able to take these decisions, these crunch decisions in a short time frame to ensure that assets do not end up in a position where liquidation is the only option. And this is something that SS Mundra also pointed out, that the power assets in the current state that they are in, without power purchase agreements or without fuel linkages, if you end up going to the NCLT, you're only going to end up into liquidation because nobody's willing to buy something that's really not worth anything. Yeah. So you need to avoid that, and for that the bankers need to take an important decision at an early time. And if they're not able to do that within a 6-month time frame, then it's not sure how they're going to resolve these assets.
Yeah, I mean, I'm sure, Rishi, that if all of these get into the liquidation mode and finding a buyer, there are not enough buyers out there in the market.
Not enough buyers at all, no.
Yeah, this is, well, it's a resolution that has reached a particular stage, but don't quite know if this is how this would be the right way or not.
Call it resolution because it's one of the schemes, but not really resolving anything. You're just like dumping them.
Yeah, and I think we've gotten enough views both from the lending side as well as the other side that well, this may not be the end of it. Thanks, Rishi, for putting this into perspective. The interesting bit, though, is that one of these stressed assets has found a buyer. Now, remember, Bloomberg News reported yesterday that the deal, Adani Power seems to be interested in GMR's Chhattisgarh power plant. Bloomberg News has learned that the deal is likely to be announced in the next few weeks. George Alexander of Bloomberg News is here to take us through the details. Now, George, interesting that a highly leveraged company, which is Adani Power, has found it apt to take on more leverage and take on GMR's power plant.
But if you look at the asset is decent. It's 685 megawatt, two plants of 685 megawatts, so it's a decent plant. And they are not getting it at a very high price. I mean, they are paying 3,800 crores, which is the loans which they have, and another 1,400 crores of non-fund liability. So it's not a huge, it's not a huge deal, at least as far as Adani is concerned. And I guess Adani, I mean, there are very few buyers in the market at this point of time. There's Adani, there is JSW, there is Vedanta, a bit Tata Power. So there are just 4 buyers, and there are too many assets all over the place. So, I mean, based on what you were saying earlier, it's a buyer's market at this point of time. It's not a seller's market. I mean, which has been the case for the past few years now. I mean, because if you look at it just for SBI, there were some 34 power assets which they had. There are resolutions which are happening, 7 which are likely to happen. Obviously, this would be a part of the 7. I guess lenders will have to decide. I mean, the interesting thing is, even on this GMR Chhattisgarh, the actual loan was 5,800 crores. They are getting 3,800 crores. But this 5,800 crores was again post a restructuring. The earlier loan was somewhere around 8,000 crores. So if you look at it on a like-to-like, it's completely different. So, but are banks ready to take the cut? I guess without they actually, seriously looking at it, I don't think a deal can happen at this point of time unless until bankers really come into the table and decide that, yeah, this is the only way out.
Interesting. So, sweet deal. What do you learn, though? Will this be announced in the next few weeks? And will, I mean, any inkling of whether this is it, or could there be more in store? Because the seller is clearly under stress.
Yeah, so there were four to five buyers earlier, and people who had shown interest, out of which what we understand is Adani's bid has been the best, at least till now. Like in the case of NCLT, if someone says that, no, I'll give a better pricing, which at this point of time doesn't look like it, at least no one else has made that, because I guess the other view is, there are enough of other assets in the, on the table, where you can extend yourself up. So maybe the other buyers could be thinking that they could also look for other assets rather than just put all the eggs in one basket.
Well, that's interesting. A couple of numbers, George, that I want to, when I was just scanning through research notes and I tried and find out these numbers. Now for Adani Power, remember, one big talking point in the Q4 numbers was that the Mundra plant commercial shutdown, which Adani, of course, said that the penalties would be much higher than the losses, and therefore they went ahead and shut down the plant, but it continues to impact the PLFs. And almost all brokerages believed that even though this might be a sweet deal, but the fact that Adani has made no secret about its ambition to expand inorganically, that remains to be a key risk. Now look at these numbers. As of Q4 FY18, the total debt circa 50,000 crores for Adani Power. The debt to equity, depending on whether you look at core equity or otherwise, but different brokerages look at it differently. Axis Capital, for example, their notes suggested that the debt to equity about 27 times. ICICI Securities debt to equity about 66 times. It is not a company which is in the best of financial health, but yet fairly confident about going out and having ambitious inorganic plans, George.
What you're saying is true, yeah, but if you look at it, it's not only these, but even if you take up something like a JSW Energy, I guess that would also be, a bit stretched. May not be as stretched as Adani Power, but a lot of companies in the power sector are stretched because they have not been able to get equity in the past few years. Adani, for that matter, 2015 or 2015, they bought the Lanco unit, which was another 6,300 crores. So they have been doing these acquisitions, which are like, so large plants. These are not small plants by any which way. Yeah. Both these plants are now like about 1,000 megawatt. So large plants which they acquire at these are like dirt cheap price at the best of times. I don't think you can get it any more cheaper than this. So, and as a group, I guess they are a lot more confident that they can do this deal. So I guess that's the reason why they are trying to do more deals.
Well, in a few weeks from now is what George Smith Alexander believes this deal could be announced as well. Thank you so much for putting this into perspective for us today. And of course, viewers would have seen that story on the Bloomberg Coin website and the Bloomberg terminal, I think around 4:30 p.m., if I'm not wrong, in trade yesterday. So exclusively from Bloomberg News. Thanks, George, for joining in today and giving us that perspective. Well, that's more to the power story. Now, some more trouble news. Jet Airways reported a loss as expected, but it was a lot wider than what the street was working with. Rising costs and the weakening rupee have played havoc with Jet's financials in the quarter gone by. Sumit Sarkar is now standing by to sum up the numbers. Sumit, what did you make of the numbers?
Well, the numbers were weak, as you just mentioned. Now, if you see the headline numbers of Jet Airways, though the revenue of the company was higher by close to 6%, on the EBITDA front, that is the operational front, the company reported a loss for the second consecutive quarter. And this time, that is the June quarter ending, the company reported an EBITDA loss of close to 382 crore rupees. On the bottom line front, the company reported a net loss of 1,323 crore rupees. Now, this is double than what the analysts were expecting. Analysts were expecting the net loss amount to be close to around 500 crore rupees, but the company reported a net loss of around 1,300 crore rupees. Also, the net loss amount is higher than what the company reported in the last quarter, where it reported a net loss of close to 1,000 crore rupees. So it was a weaker rupee, higher fuel cost and competitive fares which impacted the June quarter numbers of India's second largest airline company. Now, rupee depreciated by around 4%, because of which the company reported a foreign exchange loss of close to 365 crore rupees. As jet fuel prices were higher by around 27%, the company's total fuel cost shot up by around 53% in the June quarter numbers. Now, passenger yields that were lower by around 2.5% compared to last year. And most of this pressure would have come from the domestic market, because if you see in the domestic front, the company's passenger growth rate was close to 10%, but revenues were higher by only 3%. As compared to international front, where the passenger growth rate was negative 1%, but the revenues were higher by 9%. So this clearly shows that there have been the competitive intensity has been higher on the domestic front for Jet Airways. Lastly, for Jet Airways, in this quarter, the finance cost was also higher by around 27% to close to 249 crore rupees.
Okay, and Sumit, they did lay out a plan of sorts of reducing expenses, in some ways trying to indicate what will happen to the debt numbers as well. Would these plans be enough to help the company during such troubled times?
So I'll just give you the few highlights of that cost reduction plan that the company stated. Now, of that cost reduction plan, the key highlights, according to me, first was that the company has said that they're looking to reduce its debt, which it could do by either infusing fund or by monetizing its stake in Jet Privilege. Now, earlier there were news reports that the company is planning to do so, but this is the first time where the company has come out and said that they're looking to infuse funds or monetize its stake in Jet Privilege to cut its debt. The second was the company is also aiming to reduce its total cost by around 2,000 crore rupees over the next 2 years. And along with this, the company is also planning to reduce its ex-fuel cost per available seat kilometer by another 12 to 15% over the next 8 to 10 quarters. Now, this 2,000 crore rupees cost reduction plan that the company is planning to do over the next 2 years, it's doubtful how sustainable it will be for the company, because if you see in the first half of calendar year 2018, the company's revenues were shorter by more than 2,500 crore rupees to meet its total expense, and that was because of weaker rupee, higher fuel cost and competitive fares. So this 2,000 crore rupees cost reduction plan over the next 2 years, it's doubtful how sustainable it will be for Jet Airways.
Okay, Sumit, thanks for putting this into perspective. Let's wait and watch what happens to the stock in early morning trade. Ceteris paribus, it should react negatively. Let's wait and watch if that happens or not. Now, remember, let's talk about earnings per se. We've spoken at length about what's happened to earnings and recoveries, etc. And while the earnings recovery may still remain elusive, if you look at the earnings per share estimates for FY19, analysts have already started either tempering their expectations or taking that up. But it's not all that bad, remember, as I said, because some companies have surpassed projections too. So it's an interesting list, and Jayesh Khelani is standing by with a roundup of stocks where analysts have revised estimates either upwards or downwards. And Jayesh, good morning. Very interesting, but it's a wide universe. How have you narrowed down the list of companies?
Morning, Neeraj. So yeah, important to know the methodology. So what we have done is, in fact, the Bloomberg estimate that has to be available from July 10th, wherein we had the first Nifty company that reported earnings till August 26th. So that's the time duration that we have taken. And the other important parameter, to remove the skewed results, we have narrowed down to the company being tracked by at least 10 analysts or more. So, we get a good roundup view of the consensus estimate. And also important to notice is that the Nifty earnings, in fact, they fell 7% short of what the analysts were expecting. So we tried to broaden this horizon and bring you a picture of what the entire universe looks like. So first, let's have a look at the entire set of stocks that we have. The methodology that I explained, by that we narrowed down to about 251 companies, and there have been more downgrades to the EPS of FY19 that the analysts were expecting. So we have 57% downgrades for the EPS, while we have 39% that have been upgraded on the EPS, and 4% only have remained unchanged. But there have been some key sector trends and stock trends that we have been able to narrow down from this. So now the upgrades have not been much. So first, let's go through that. Technology, energy and FMCG are the only three sectors that have seen an upgrade, and that too you can see that the percentage has not been much. In fact, in the technology space, an interesting trend that really came across was that all of the technology stocks except for TCS and Redington, they have been upgraded. So TCS, the big name to watch out for, and then you have the downgrades starting from the industrials and going on, so on and so forth. We have utilities, financials and materials that have been significantly downgraded as well. Moving on, we have discretionary, healthcare and communications, which have been downgraded to the tune of about 3.5 to 12%. In the communication space also, we have about 12 stocks, and most of them have been revised down 11% on a consensus basis. The FY19 EPS has been revised downwards. Now, if you look at some of the upgrades that have come in, so some interesting stock names pop up over here. So you have DLF, of course, after the results. The management commentary has been that there will be significant improvement in the cash flow, and analysts are probably factoring in that. But analysts have revised the FY19 EPS upwards to the tune of about 50%. And you have Nalco about 39% upgrade, Ashoka Bilcon also about 37% odd. This is largely on account of the earnings that we got. Nalco, of course, on account of the higher LME prices that we have seen. Mahindra & Mahindra, that has been a standalone auto performer that has in fact posted a good set of results from the auto space. And we have L&T Finance, which has also been upgraded to the tune of about 12%. But there have been some downgrades as well. Let's have a look at that. So Bharti Airtel, that EPS has been revised down to the tune of about 62%. And Interglobe also, 30% that we have seen and downward revision. Now, both of these posted a weak set of numbers, and analysts have accordingly revised their EPS downwards. Tata Communications, Narayana Hrudayalaya, and Healthcare Global, both of these companies, in fact, have faced some margin pressure in the first quarter earnings. So that's the reason we are seeing. But, overall, doesn't look like a pretty picture because there have been more downgrades than upgrades that we have seen post the Q1 earnings.
Yeah, and the extent of downgrades too seems to be much higher, Jayesh. But very interesting names out there. One would have thought that in terms of earnings downgrades, the names like Healthcare Global or a Narayana Hrudayalaya would be top of the pile, or for the matter DLF on the upside as well. This is a very interesting eye-opening list. Jayesh, thanks for putting this into perspective. This is where the earnings have been revised. The EPS has been revised either upwards or downwards. Not the stock price targets, but the earnings estimates for these companies have been revised upwards or downwards. Well, we spoke about how some of the healthcare and healthcare-related stocks are out there. There are two leading or listed diagnostic players in the country, and both have taken a very different path in 2018. Recent trends show money moving into Dr. Lal Path Labs and out of Thyrocare. So what's causing this divide? Darshan Mehta is here with a comparison. Morning, Darshan.
Yeah, so Neeraj, what we've seen on a YTD basis, Dr. Lal is trading near record highs. It's up 22% on a YTD basis, while Thyrocare is down almost 10%. So we're trying to find out why Dr. Lal, despite being in the same business, why money is flowing into Dr. Lal and why money is flowing out of Thyrocare. So basically, this is about it. Firstly, just to give an indication of how this industry is, it's heavy discounting by the new players, and that is causing problems for both Thyrocare as well as Dr. Lal. Secondly, unorganized players continue to be dominant players in the market, and thirdly, the shift to organized player to unorganized player is very, very gradual. So there are some concerns that are there even for both Dr. Lal as well as Thyrocare. This is the basic industry dynamics that we're seeing as far as both of them is concerned. Now, how is this entire dynamics of the diagnostic business? 70% is pathology, which is your plain bread and butter, taking out blood reports and sample, and the 30% is imaging, which is high margin. So this is the industry segment-wise breakup that we've seen. As far as let's see the revenue breakup that we've seen. As far as the revenues are concerned, clearly over the past 5 quarters, we've seen that the trend of Dr. Lal is pretty much on an improving part, even on a year-on-year basis and quarter-on-quarter basis. Dr. Lal did manage to move up significantly. On Thyrocare's part, it's been rather stagnant, not too much on a quarter-on-quarter basis. In fact, it saw a decline when Dr. Lal actually moved up. So this is the revenue comparison. On the other comparison front, what we've seen is this is basically the bottom line move that's there. Even if you're looking at Dr. Lal Path Labs, the move has been much higher compared to what we've seen as far as Thyrocare is concerned. They earn a much higher profit this time. The other trend that we've seen is the margin picture. The margin picture for Thyrocare is basically Thyrocare earns a higher margin, and the reason here is because they take it on a basis, even though the EBITDA for Dr. Lal is higher, Thyrocare takes it on a net sale basis. That's why the base becomes lower and their margin is much higher. Dr. Path Lab takes it on a gross sales basis. That is why their actual number, gross sales number, is much higher and the EBITDA is higher. So the margin trend we've seen is that it's improving over the past few quarters for Dr. Lal, and it's decreasing significantly for Thyrocare, and it's been not very, very stagnant. So that's the margin trend that we're seeing at this point of time.
Interesting. But it's not just the financial performance, Darshan, because while Thyrocare may have had a chalk and cheese last few quarters, it's not that there has been a steady uptick for Dr. Lal. So what's resulting in this outperformance?
Yeah, so there are a few points that we try to find out what's differentiating both of them. First of all, the growth rate is slowing for Thyrocare. If you see that what's happened over the past few quarters, the growth rate does indicate that for Dr. Path Labs, it's managed to move up over the past few quarters. But for Thyrocare, from a growth rate of 32%, it's come down to 13%. This is on a trailing 12-month basis. And for Dr. Pathlabs, even though it's come off, but over the past 3 quarters, we've seen that there is gradual, past 3 years, there's a gradual improvement that's seen. That's the first reason, and why Dr. Lal is prepared, because the revenue growth is there. Secondly, Dr. Pathlab opens a lab in Calcutta. Now, how is this important? Because now this is a big lab that they're opening in Calcutta, which will give them access to the eastern market. They have been very dominant in the northern India. Now they have a foray into the eastern market, which is also very, very attractive. So that's the second point. The third point that we want to talk about is that Thyrocare is a B2B business and Dr. Lal's is a B2C business, which makes Dr. Lal a much more margin accretive business even in terms of EBITDA and growth rate. So that is something that differentiates both of them. The fourth reason what has happened is that the brand recall for Dr. Pathlabs is much higher, especially in North India. While Thyrocare's brand name is not as high as what a Dr. Pathlab is, and this is something that I spoke to a couple of pathologists and I spoke to a lot of analysts. So that was one of the reasons that's been spoken about. The fifth reason is the return ratios in Dr. Lal Pathlabs is much superior. If you're looking at basically the return on equity, it's 25% versus 20%, and core ROIC is 45% versus 23%. So clearly that's the another differentiating factor that we've seen. A couple of other more points. Strategy. Thyrocare's, what we've seen is that Dr. Pathlab's, I'm sorry, this is different. Dr. Pathlab's strategy is very, very consistent. For Thyrocare, basically is diversification. They open up some business. If it doesn't work out, they close it. So Dr. Pathlab is very, very consistent as far as their strategy is concerned. This has to be the other way around. That's our mistake here. And commentary for Thyrocare, very, very inconsistent. Over the past few quarters, if you see, the commentary is not consistent, while it's very, very consistent for Dr. Pathlabs at this point of time. So that's the basic thing. What can we expect ahead? No doubt the consensus target now is higher for Thyrocare, given the fact that the move hasn't been there and Dr. Pathlabs has moved up significantly. So Dr. Pathlabs, the return ratio returns as per Bloomberg is not very high at this point of time. So that's the trend that we are seeing at this point of time. And as far as the valuation is concerned, no doubt on all parameters on an FY19 and FY20, Dr. Lal still is expensive. So that is that are the two reasons. Valuation and the returns are the things that go in Thyrocare's favor at this point of time.
Well, let's wait and watch what happens. But for this year, thus far, Dr. Lal Pathlabs a clear winner compared to Thyrocare. Darshan, thanks for putting that into perspective. Some financial metrics and some non-financial metrics, all of them leading to Dr. Lal, at least in 2018, doing much better. That's all that we have on First Word today, but lots more lined up on the show. We discuss the business outlook for VIP industries with Chairman Dilip Piramal. Also speak to Parag Shah of Infraconstruction after the subsidiary bagged an arbitral award from the Maharashtra government. So all of that coming up later on. But after this break, full tilt towards the day's trade.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
Kerala is tiding over the worst calamity that the state faced in a century. The intensity of the calamity and the losses suffered thereby are unparalleled. A preliminary assessment pegs the loss at around of rupees 20,000 crores. It is a humongous task to undertake various tasks of rehabilitation and reconstruction. Only with the wholehearted support and cooperation of all of you, we can rebuild Kerala. Your contribution, however small, will go a long way in achieving this goal. Please contribute to the Chief Minister's Disaster Relief Fund. We shall overcome.
Good morning to everyone. Welcome back to Indian Open. You're watching it right here on Bloomberg Quint. Let's go straight into what happened with Jet Airways and the quarterly losses that they reported for the second straight quarter this time around. We've got with us Mark D. Martin, founder and CEO of Martin Consulting India. He's joining us on the phone line right now to dissect these numbers and chart the way forward for us for Jet Airways. Mark, what did you make it out of the numbers initially, and more likely, the plan that they have laid out to probably bring these cost control measures in place?
Morning. Thanks for having me today. I took a look at the figures, especially the first quarter results. And look, if you think about it, 1,500 CR is what the negative losses are, and the previous quarter it was effective profit of 500 CR. So I mean, if you really look at it in airline terms, the 1,500 CR is directly reflective of what we have in terms of the currency. The currency drain on the dollar, and also oil prices have shot up in proportion and aggregate. So effective, I mean, what is 1,500 CR is just about 170 million US, which is just about the price of 2 Boeing 737 Maxes. It might look good in relative terms, at least for the sake of conversation, but a lot depends on how Jet Airways deploy their capacity and traffic going forward. I think the more critical part right now is to deploy as much as possible out there to take advantage of the winter season, because monsoon and usually pre-monsoon season is not very encouraging for most airlines. Yeah.
Looking at what's dragged them down, obviously the forex, you've got the losses coming in from fuel expenses, which shot up 53%, but they're pretty confident that they're looking to save up about 2,000 odd crores in terms of costs over the next 2 years. You think that's a possibility for them?
Oh, easily. I would like to consider one of, what they're doing at the moment is completely realign their house, their back office, their maintenance, their reservation system. Look at how they look at crew salaries and flight attendant salaries. And so, again, as I said, a lot of it would be based on how well does the airline buy into what the board and the management want to do. But all in all, I don't think it's going to be that much of a negative for them. I do believe they should kind of pull out of it. Even if they can achieve half of what they're defined as a recovery strategy, they should be more or less on the way to success and like a total or possibly a partial pullout. Remember, the advantage Jet Airways has over the rest is that they have the luxury and liberty to amortize their debts and losses over a longer period in time, and they can restructure that. And that's because they have assets, unlike other airlines who don't.
All right.
Okay, Mark Martin, leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. That's the view from Mark Martin on the Jet Airways numbers. Suffice to say, this is not this quarter is not the only reason why Jet Airways is under pressure. This calendar, it's been under significant pressure.
Well, in fact, Neeraj, year to date, 66% drop on Jet Airways. Considering that it's one of the most expensive aviation stocks, not just in India, but across Asia as well. And I just want to actually go across and have a look at the chart here, which talks about Jet Airways versus the Bloomberg Asia Pacific Airline Index and a few other counterparts within Asia. So you've got Thai Airways, Garuda Indonesia, you've got Singapore Airlines, the China Airlines is not here, and the South Korean Airlines. So every other airline that you pit a Jet Airways against has also declined, because obviously crude oil prices have gone up, but you've seen a dip of about 20% on average across the Asian Pacific pack. But for Jet Airways, a 66% dip. Remember, for us, the fuel cost pressures are a little bit more because of higher taxes as well. So for them, probably that gives a little bit of cushioning. But aside from that, even the valuations, considering the dip we've had, we're still very expensive. So on an EV to EBITDA basis, you've got Jet Airways, which is trading at 9.5 times for FY20 versus all the others, which are in an average range of about 6 to 8. So we're still more expensively priced. But goes to see whether there's more pain left or whether they actually get their deal sorted out and they're actually managing to go across and get those cost pressures under control and turn into the green again. So interesting to see what happens from here.
Well, let's try and figure out, I mean, we'll get to know when we get to know about it, but let's try and figure out what our analysts making of it. Mayuresh Joshi of Angel Broking joins in right now with his views on the markets as well as specific movers. But Mayuresh, since we're on the topic of Jet Airways, an initial thought from you about what does one do with the Jet Airways if either one is invested in it or is looking at the price and thinking of whether or not to go out and buy it?
So, morning Neeraj. Again, I think what has probably come out of the numbers, I think it was largely on expected lines, more or less to do with the crude price spike that we've seen and the rupee depreciation not helping their cause as well. So, I think it was a very, very tepid revenue growth that they posted. And in such scenarios, I think to push through your realizations, I think in terms of ticket prices is not possible. So, I think that was very well exhibited in terms of the fall in yields. Now, what you're probably seeing in terms of Brent crude still firming up, the rupee depreciated against the dollar, staying at those levels, you're probably looking at numbers still being extremely soft. And you're probably entering Q2, which is one of the weakest quarters for aviation companies. So I think a large element in terms of market share loss, the PLFs have not been as good as the other competitors have been. And the competition intensity probably still expected to continue. So I think all these factors are going to take a hit in terms of reported numbers. I think the plans in terms of debt restructuring, reducing costs, I think the numbers will do the talking over the next few quarters. So I think the softness, as I've time and again said, would probably continue for aviation companies. Jet in particular is probably the hardest hit. So I think staying away from aviation at least for 1 or 2 quarters more, we'll probably take a call if crude probably comes down and the rupee starts appreciating against the dollar.
That's Jet Airways, no respite over the last 3 months, in fact more pain over the last 6 months, closer to about 55 to 60% lower. Let's go across and talk some more stocks and see what stocks are actually working in the news and some brokerage calls coming in on stocks. So we'll go to Mayuresh again and get his call on the index and the market perspective as a whole. But we've got Shraddha and Nikki joining in right now. Shraddha, let's start off with some stocks and news that you have.
Devina, JBF Industries is likely to react positively. They have approved a debt restructuring plan. This is for its subsidiary JBF Petrochemicals. So KKR Jupiter Advisors will buy out that entire 100% stake in the petrochemical arm. What will happen because of that is that the total debt of $464 million in JBF Petrochemicals will now no longer be consolidated in the books of JBF Industries. It will also eliminate all the contingent liabilities in the form of guarantees that were provided to the lenders of JBF Petrochemicals PTA project. So that apart, there will also be another 450 crores which the subsidiary will return to JBF Industries. This is in lieu of settlement of the inter-corporate deposit that was given. So the 450 crores which will come, a part of it which will be used to repay lenders, so that will bring down debt to some extent, and some part of it will be used towards working capital. And the company has said that the infusion of working capital funds will help them take the company's operation to full capacity over the next 2 quarters, and that should have a positive impact on the profitability. So positive reaction likely there. Oriental Bank of Commerce will consider raising 1,000 crores via QIP in its board meeting on August 30th. You also have Orient Refractories, where its promoter sold 3.13% stake in block deals yesterday. HDFC and L&T mutual funds picked up 1.1 and 1.9% stake respectively. And finally, All Cargo Logistics will meet Premji Investments and some other investors on August 28th. So interesting to see how this one reacts on the back of the Premji Investments name. Right,
Shraddha. Some news driving stocks there. J. Kumar Infra Projects, I believe Citi's got a call on it?
Yeah, it's an interesting report which has come out. It has initiated a buy rating with a target price of around 460, which implies a potential upside of 85%. And in bull case scenario, the upside is more than 100% with a target price of around 475. The brokerage note says that it's a play on India's urban infra opportunity and one of the top ENC picks. Backward integration is expected to lead to sector high margins. Now also do bear in mind the fact that PBT margins already are higher as compared to the industry average in the last 3 to 4 years for the company. Order backlog 3.6 times of sales, which provides a good strong sales visibility. Valuation at this point of time at a PE of around 16 times, command a premium, but then says that is well deserved due to the strong backlog, earning visibility and faster earning growth. In terms of risk, it says that project concentration and asset heavy and high fixed model is currently a risk. It also sees some risk coming in from the spillover impact of blacklisting by local municipal corporation and the allegation of shell companies.
All right, guys, thanks very much. So a lot many more stocks to watch out for. Some may have a bearing on the prices as they open up for trade. Mayuresh, just coming to you for the market setup as a whole right now. And, you know, do you think it's advisable for a fresh entry point right now?
So morning, Davina. I think what largely has transpired in the markets is it's climbing all issues and headwinds that are probably coming in its way, both domestically and globally as well. Having said that, I think the earnings season which just transpired, I think the earnings season has held up pretty well, though on a very low base. The expectations street is building up is a reasonable amount of growth in the second half and a solid recovery if all other things probably remain constant. So I think the headwinds, both in terms of how the political situation will be in the second half and our own concerns related to the fiscal and the current account deficit, that can have a bearing in terms of the overall moment in terms of how the index might perform. But again, at this point of time, I think with strong liquidity and expectations of what is probably in the price, with price hikes expected to come through, or the rate hikes from the Federal Reserve and the other central governments, along with what is probably happening in terms of the trade tariffs. So I think the US-Mexico trade deal has definitely boosted sentiments in the US markets, and that probably is having a rub-off effect. So I think it's a sum of moving parts locally and domestically. But largely, again, I think a stock-specific approach is something which is mandated in markets like this.
All right, Mayuresh, just stay on with us. Time to get a bit technical now. Gaurav Bissa, he's joining in along with Dharmesh Shah to give us some more stocks, you know, with regards to the technical side and some levels to watch out for. Let's start off with you first, Gaurav, on the index, your trade, and if you have any stocks.
Good morning. As far as indices are concerned, I've been saying time and again on previous occasions that Nifty is in a strong uptrend, and if you look at the option data, you might not see the real picture, but if you look at the 4-hour charts in Nifty and Bank Nifty, you will see that they are bouncing from strong support levels, trading in upward sloping channel, bouncing from the support levels, and we have seen it's moved up towards level of 11,700. If these levels are sustained, it can head towards level of 11,800, 850 in coming days. As far as trade is concerned, it becomes a little bit dicey because the supports are at much lower levels and one has to look on a very minute things. For me, the trade would be any dip in Nifty towards level of 11,640, 650. That can be bought stop of 11,600, targets of 11,750, 780. For Bank Nifty, if it sustains level of 28,300, we have seen a close coming on those levels. If these levels are sustained, we can see a jump towards level of 28,500. However, the supports are seen at levels of 28,050, 28,100. So this towards again 1:1. One can buy at 28,500 call option of weekly series and play for the option becoming at the money.
All right.
Okay. Dharmesh, what's your index call for the day? What's the strategy?
Yeah. Good morning, Neeraj. Neeraj, yeah, definitely the momentum remains to be very strong in the market. If you look at the yesterday price action, remains to be a strong bull candle, where the 3-day breather has been taken out in a one single day in yesterday's trading session. So we believe, I think so, the momentum is very strong. Going ahead, we believe, I think so, to talk for positional, I think so, we believe, I think so, the Nifty is more likely to head towards the target of 11,925, being our target over a period of time. Being a reason being upper band of the channel value since June 2018, the rally has been started. We believe, I think so, the upper band of the channel value is placed at around 11,930. Also, the 161% extension of a rally from 9951 to 11,171, the previous rally, the extension target comes to around 11,942. So we believe, I think so, going ahead, 11,925 is more likely target for Nifty. Coming to intraday, I think so, we believe, I think so, buy on dip should be the market for the day, as we are opening around 11,740. We had a buy in Nifty at 11,710, 720, keeping a stop loss of 11,680 and a target of 11,775. So overall for the day, Nifty is a buy for the day. Coming to stock specific, again we believe, I think so, for the intraday, Tata Tech Mahindra remains to be our top pick for the day. We believe, I think the overall IT space looks positive, and among those, I think so, Tech has been surpassing its multi-year high in the yesterday's trading session. So we believe, I think so, TechM can see a good momentum in going forward for the day. We believe a target of 752 and a stop loss of 729 in today's trading sessions.
Okay, that's one call. What's the other call, Dharmesh?
Yeah, to talk for some positional target for the day, to talk for 3 to 6 months, we had a buy on SBI. If you look, the stock has been an outperformer in last 2 months, been among the PSU space, and the stock has already seen a rally of around 25 to 30%. Post result, we have seen a corrective phase. After making high of 325, the stock entered in, had retested the previous breakout level, which was around 288, 289. So we believe a support taken at the previous breakout levels. From the current levels, we believe a buy on SBI with a target of 341 and a stop loss of 278, being a 200-day exponential moving average. So overall, I think so, we expecting, I think so, SBI to outperform going forward, and we expecting, I think so, the momentum in overall PSU banking space should pick up in the coming days.
Right. Gaurav, I believe you got 2 stocks, Mindtree and Hindalco.
The first recommendation would be Mindtree. We saw a strong move coming from levels of 980,000 and it went towards 1,040, 1,050. Therein we saw some amount of long unwinding happening. Some shorts were seen getting built, and it saw a small correction towards the level of 1,025. Again, bounce back from the support levels. We have seen some amount of short covering in the name, considering the rollover, taking the rollover in the account as well. There's some amount of short that we have seen in Mindtree. Also, it has given a breakout on hourly charts. IT space for one is looking, if not very buoyant, at least it's looking quite stable. And this is one that is looking quite interesting. One can have a stop loss of 1,032 by current series Mindtree futures for target price of 1,080. Second would be buy on Hindalco. A lot of these metal names are now seen in action. Good amount of volume-based buying has been seen. Hindalco looks interesting for the reason that if you look at the option chain, 230 call option commands a very high concentration, and it's not just the call option sides having a high concentration. It is the highest concentration among the entire option chain, and this is not just for the current series. For last 2 months, this has been the case, and we have finally seen a close above levels of 230. So there's a breakout that we have seen in Hindalco. If it sustains level of 230, it can easily go towards the level of 240 to 45. For next 2 days, one can buy for target price of 225, have a stop loss of 227, and for positional bet, it can go towards the level of 240 to 45.
Stay on, gentlemen. Lots more to talk about. On to our special segment, Bloomberg Edge, wherein Jayesh Kilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Jayesh, what's the stock on your radar today?
Morning, Neeraj. Before I give out the name, it's a stock that has a return potential of more than 40% as per the analyst consensus estimate target price that is available on the Bloomberg. And incidentally, a proprietary Bloomberg indicator has also turned positive as of yesterday's close. The stock that I'm referring to is Raymond. First, let's have a a look at how the trender indicator works and what are the conditions that you have to keep in mind. It's a proprietary Bloomberg indicator, like I was telling you, which uses the average true range as one of the key inputs for calculation. What does it do is helps you to generate buy and sell signals, and also helps you to manage the stop loss as well. How do you get your buy and sell signals? Simply follow the color and you'll get that. Buy when the trender flips from red to green, and you sell when the trender flips from green to red. This time around it's a buy indicator that has come about for Raymond. Let's have a look at the chart on the trender. Now you can see that in the last 6 months the stock has been on a constant decline, right from 1150 levels to about 750 as well. And you can see that the post the month of May, there has been a constant red line on top of the candle chart that we have. But as of yesterday's close, you can see this last candle over here, that has in fact crossed above the red line, which was the resistance line that was indicated by the trender indicator. What will happen going forward is that you will see a green line emerge just below it, and that will be the stop loss. So effectively a buy signal coming in for Raymond.
All right, Jesh, how accurate is this trender indicator?
Devina, works pretty well in the last 1 year. If you had in fact bought all the indications given by the trender, average 10-day result would be about a 3.5% gain on the indicator itself.
Right, Jayesh, thanks very much for that. Mayuresh, I'm going to come to you with one stock from the consumption space, and that's Marico. You've got a lot of brokerages now suddenly taking notice of this stock. Though the stock on a one-year basis has not really done much compared to some of its other peers. It's been up 18%. Valuation-wise also FY20, price to earnings at 42 may not be as stretched as compared to some of the others. Do you think this is a stock that one can look at?
So Devina, I think clearly what has probably transpired is the copra prices. Now with elevated copra prices and the kind of price hikes which were in muted proportions that were taken by the company in the quarters gone by, that definitely had an impact in terms of value. Now when you're probably talking about volumes and what a lot of these FMCG companies have put forth in terms of the leverage being played out with volume and price-led growth, actually having a tremendous say in terms of their earnings. I think that is one aspect which is holding these stocks together. The second element in terms of moderation of copra prices and with the price hikes they have actually taken before this, I think the elevated margins are here to stay. So I think with operating margins being stable and gradually improving, the leverage that you probably see, as I said, because of volume-led growth is going to be very, very evident. Now the value-added hair oils have been doing exceedingly well for the company. Saffola probably was one which was being a laggard, and so was Parachute in terms of the implied growth that one really expected. But if all these cylinders probably start firing based on the assumptions that we probably got or the market probably perceives, yes, I think the earnings might probably look far better in the coming fiscal. So yes, I think anybody holding on to the stock should clearly hold on.
Interesting. Mayuresh, yesterday the whole retail space was active. What do you like from this pocket and why?
So Neeraj, I think two of my favorites, you know that, I think are Future Retail and Trent. I think the logic here in terms of how the same sales store growth are panning out for the industry as a whole, I think very, very encouraging signs. The other element in terms of what you're probably looking at from a value perspective, I think if one really looks at the different sub-segments that they probably offer, so for example in Trent, when you're probably looking at West Side, I think the kind of sales growth that one expects, the kind of earnings potential that they can deliver can be quite substantial. Now the kind of capital investments that they're probably putting through, both in terms of Star Bazaar and their other hyper outlets, and the expectations of the EBITDA per square feet that can come through from these stores, I think that can be quite significant going forward. Zara has been doing exceedingly well for them, and in terms of the extended sales that probably come through, even if one adjusts for all those factors, I think there is definite scope of margin improvement. Again, in the case of Future Retail, I think whatever you're probably hearing in terms of current news, if one really looks at how their standalone performance has been, I think it has been quite reasonable so far. Can we expect this performance to gradually improve, both in terms of the operating parameters And again, qualitatively in terms of how the balance sheet probably looks over the next 2 to 3 years with improvements in operating dynamics, I think it's going to be gradual improvements on both counts, both in terms of their store operations as well as the balance sheet actually becoming far more healthier based on the trends that we are probably looking at. So again, I think future retail and trend in my opinion.
Interesting. Some other movers included a VIP Industries in trade yesterday, which was up and active. Remember, the power companies could be under a bit of stress in this session today as well. So those are a few pockets to watch out for. Gaurav, from any of these retail-focused names, though, Shoppers Stop was very active yesterday, as was Future Retail, and a couple of other names did reasonably well too. Do you like any stock?
Among the names that you mentioned, probably F Retail, Future Retail is looking a little bit interesting. It's trading just near the long-term averages, 50 DMA or 100 DMA, so to speak, of even a bullish MACD crossroad on daily charts. If the current levels are sustained with a small breakout that we have seen, it can test levels of 575, 580. So that would be on my radar. The thing with Shoppers Stop is that it has been giving breakouts, but they have not been very convincing. It has been giving false breakouts on more than one occasions, and finally it has given a breakout with the volumes are good, but it's already moved up quite a bit. So I would rather play with something that has just given a breakout and there's a good chance of making money rather than something that's run up so much. I don't want to buy just absorb at any level. It would be very risky. The supports are way down. It's at around 580.
Mayuresh, have you been tracking the activity in the fertilizer space? Because it looks like there's been some news buzzing around about how they could get subsidies every week from the earlier, 8 to 9 months that they used to get it at.
So Devina, again, largely if you probably look at the fertilizer subsidy mechanism and the payment gateways, I think, yes, there have been some amount of news circulation.
Mayuresh, can I request you to just come, I'll just come back to you on this answer as well, but just 9 seconds away from pre-open session, and seems like while the Asian markets are a mixed note, we'll start off on a positive note, Digna.
It looks like it. SGX a 0.25% higher, 11,754, and you've got the pre-open ticks on your screen. Nifty is seeing jump of over 1%, but that stabilized 153 points, so reaching 11,800, but that will come down because the Sensex is just up about 1/3% at 38,831. A big move coming in HDFC Bank right now. We're seeing a 9.5% gain, but that will also stabilize. Hindalco is up 1.8%. Power Grid is up 2%. You've got Infosys up 1.5%. Bharti Infratel. It's moving a lot. You're seeing a lot of volatility right now in the prices, which is so in the pre-open. Tata Motors is up 1.2%. Tech Mahindra is up 1.2%. Titan is up 1%. Indian Oil, IndianOpen Bank, Coal India, Bajaj Finance have gained anywhere between 0.8% to 1%. Wipro is up 0.5%. TCS is up 0.5%. GAIL has moved up another 0.5%. Eicher Motors, Ultratech Cement, Bharti Airtel, Lupin in the green, but marginal move of about 0.1% to 0.25%. There are still few stocks which haven't given pre-open moves yet, but in the red are 2 stocks, HUL and Z, marginally though.
Interesting. Adani Power has this 10% uptick. Well, I don't know if it has to change. I don't think it will stay up. Yes, it's already changing. Power companies haven't got the best of news. Adani Power, of course, has individual news of buying in the GMR plant at a very reasonable rate. Let's see the kind of impact that comes in on this stock early morning. Fertilizers, as they were saying, top of the pack really. Chambal Fertilizer showing a very excited move. It could stabilize a bit, but still up and about in session. RCF is showing a move as well. I think everything related to do with fertilizers will probably have a brisk start because of the news flow surrounding the space. One of the media houses reported about how there could be a weekly subsidy. We'll talk about that in just moments from now. VIP, the management joining us a bit later on, but looks like it'll start off another 5% higher at 664. This will be trading at new highs for itself. And last but not the least, just want to mark what's happening to some of the retail counters. Shoppers Stop had big active day in trade yesterday. Let's see what that is doing. Well, flattish. And Jet Airways, which had a very dismal quarter, losses have widened. The stock looks like starting off lower. Let's wait and watch what happens. The rupee marginally better. Remember, closed at record closing lows yesterday, but 70.08 currently is about a 7 or 8 paise uptick on the rupee. The bond yields closed at about 7.89 or thereabouts, if I'm not wrong. currently at about 7.89 as well. So no big change on the yields, at least for the morning. Okay, before we move any further, let's get in Saloni Dhanuka with the key brokerage calls for the day. Saloni, good morning.
Good morning, Neeraj. So first up is Elara Capital on Dixon Technologies. Now they initiate buy with a target price of 3,475 rupees, which suggests a potential upside of nearly 30% from the current market levels. Dixon operates in a large addressable market with market leadership position in this space. Also, their asset-light model provides superior ability for the company along with healthy profitability. That apart, higher operating leverage, better revenue mix and backward integration are some of the key positives for the company according to the note, and hence they expect revenue, EBITDA as well as net profit to grow at a CAGR of 19, 31 and 36% respectively over the next 3 years. Next up on my list is Elara Capital, again on Amber Enterprise. They initiate buy with a target price of 1,225 rupees, which suggests a potential upside of nearly 27%. They believe that deep backward integration, customer engagement, significant entry barriers in the space, strong R&D as well as execution capability of the company will allow the company to grow in the near future, and hence they expect revenue CAGR of 25% over the next 3 years, largely led by their products, clients along with geographic cluster additions. And lastly, they expect some improvement in their return on equity ratio, largely driven by asset efficiency and margin expansion. Neeraj, back to you.
All right, Saloni, thanks very much for that. So those are some brokerage calls to watch out for. Jet Airways, a big plummet of 10% in pre-open session, and you have a Reliance Naval over the last 2 days not doing so well, down about 5% odd. Remember, we had news of Anil Ambani resigning as a director from the board. Mayuresh, just coming back to you, you were making a point about fertilizers.
No, so Devina, I think the payment subsidy mechanism, if it is put forth, I think it does reduce the time quite significantly. And if there is the news that we're probably hearing of weekly payouts, that does reduce the burden in terms of the working capital constraint that a lot of these fertilizer companies were paying off. To that extent, again, I think the kind of subsidies that are still expected to be received by fertilizer companies, specifically the urea-based ones, I think they should probably benefit in terms of the money coming back, and that entailing debt getting reduced on their balance sheet. And again, I think the working capital constraints going down. So I think a sentimental push through is something that you will definitely see for a whole host of fertilizer companies. But I think specifically, I think stocks like, say for example, a Chambal or a Coromandel International probably might look interesting.
Anything on the charts, Gaurav, for these fertilizer companies? Anything that you're liking?
If you talk about the fertilizer companies, something like NFL has been trading in falling channels, just about given a small jump from those levels. One can expect further up coming in the name. The stop loss for this would be somewhere around 45, 45 half. On the upside, it can test the upward band level of 55, 56, where the longer term averages are placed. I think this makes a good case on the verge of a decent breakout, bounce back on the support levels. MSCI is also giving a bullish crossover on weekly charts. I think this is one that can be bought.
Okay, interesting. Well, 8 minutes left for the markets to kick-start it. The pre-open rates should be settling in. We don't have too many losers yet. Again, it seems to be a day which will start off exactly the way the day yesterday started off, wherein there were hardly any losers, maybe some gainers, and stocks like Hindalco look like starting off on a very good note. Bajaj Finance, by the way, up another percent, and at 2981, closing in on the mark of 3,000. That would be an interesting move. From a trade perspective, not really an investment perspective, Dharmesh, what about Bajaj Finance as a stock?
See, definitely the stock remains to be the buy. If you look at the longer time frame or a short term, the stock has been making higher high, higher low without any much disappointment. So we believe, I think the stock, if you look at the overall target for the positional, I think the 3050 is more likely the target for Bajaj Finance, keeping a stop loss of around 2890. So I think so overall, I think so, yeah, definitely there could be some days of a breather for Bajaj Finance also, but any dip towards 2870, 2900 should be looked as a buying opportunity for Bajaj Finance.
Well, let's wait and watch. 298 any dip should be a buying opportunity. The other one which really rocked on the chart yesterday was Page Industries, up another 3.5%, 35,000 and counting. Do watch out for that one as well. Just continues to rise and move higher in trade. Mayuresh, post this ruling, any power company that you would even remotely think of investing into?
No, again, Neeraj, I think two ways of looking at this. What will probably happen in terms of the stressed assets and what probably gets admitted. I think that is one angle to be probably looked at. The other element in terms of a few cases being resolved, I think that can be beneficial from a banker's perspective. The third element that one probably looks at because of what has come through, and again, I think if there is no appeal to the Supreme Court, which again creates some amount of overhang in terms of timelines, but with the assumption of this order coming through, I think the consolidation for the industry probably looks to be a more plausible option at this point of time. And with this, again, I think NTPC again can be a long-term beneficiary. Again, I think the stock has not performed because of huge issues, both in terms of fixed cost under recoveries, and that probably had a huge say in terms of how the regulated equity probably panned out. But with a lot of detrimental roadblocks getting out of their way, one really expects the fixed cost under recovery to probably reduce over the next few quarters, and with expectations of capitalization exceeding capex, the regulated equity, both in terms of tariffs being stable, no under recoveries probably over the next few quarters, and more coal availability because of the agreement with the railways in terms of rake availability, will push through their ROEs. So I think if one probably looks at a very holistic picture, probably NTPC might be one of the stocks.
All right, Mayuresh, thanks very much for joining in. Really appreciate you taking out the time and speaking to us and sharing all your views. We're just minutes away from market opening, and we'll tell you all you need to know to stay ahead today. Starting with the earnings, there seems to be no end to Jet Airways' woo. The airline reported a loss for the second straight quarter. It says it's considering strategies for a turnaround.
Watch out for power lenders, banks and power companies as Allahabad High Court denied interim relief to defaulting power companies against the RBI's norms.
In bulk deals, promoter of Orient Refractories sells 3.1% stake in the company. HDFC Small Cap Fund and L&T Mutual Fund are the buyers.
In key brokerage calls, Citi initiates coverage on J. Kumar Infratech with a price target of 416 rupees per share, 85% higher than the current market price.
And UBS upgrades Jubilant Food to neutral from sell, raised its price target to 1750 rupees from 950 rupees, a potential upside of 13%.
Lastly, bad news for Wiseman and Amrutanjan as they are now placed under the additional surveillance measures framework.
All right, back to the markets then, and Dhananjay Sinha, Head of Research and Economist and Strategy at Emkay Global Financial Services, joins us on the show right now. A quick word from you, Dhananjay, on the market setup before we head into specific sectors and stocks.
So I think the market has been on a positive mode over the last few days. I think yesterday the global cues were pretty strong, and I think the market gained from the statement from the Federal Reserve favoring a gradual increase. So I think that was considered to be a sort of dovish, and that sort of improved the risk appetite. So I think the risk premium actually went up, and there is also support from the risk-free rate. So I think these two things have actually been positive from a multiple standpoint. And also I would say the earnings outlook globally, especially in the US, looks to be pretty strong. The first quarter was about 24% up for US indices. So I think there is a certain amount of the earnings expectation led versus a mix of also of expectation on the Fed, that is risk-free rate, and also the risk appetite. All these things come in combination has possibly translated into a certain momentum. I think there is a catching up that is happening across multiple other geographies, including India. So I think what you see in India is essentially a sort of a response to what is happening globally.
Dhananjay, what did you make of this Allahabad High Court not granting the interim relief to power companies yesterday and allowing lenders to now start the process of liquidation or selling, as the case may be?
So I think this is a good move. I would say that eventually this will push the banks to to go to the NCLT and initiate bankruptcy. So, Allahabad High Court's order essentially ensures that there is no lingering impact of the NPAs, especially with respect to the power companies, doesn't linger on. So I think eventually there will be quicker resolution. Either, essentially what will happen is that the banks will be compelled to take appropriate actions. There will be accelerated provisioning that banks will have to make. So let's say an average provisioning that they may have done is about 45 to 50%. Possibly that will increase to maybe about 70% or thereabout. The resolution will be eventually there will be considerable amount of sale of asset that will happen. We'll have to see how quickly that gets resolved. But necessarily what this judgment says is that means is that the banks will have to make accelerated provisioning and actions will need to follow. So I think in the near term, I would say the credit cost for the banking sector will actually increase, especially for the PSU banks who have large exposure in the power sector. But overall, it is a positive move from a resolution standpoint.
Right. Dhananjay, stay on with us. We'll just be back after market open. Just some top calls from our technical analysts. Gaurav, let's start off with you first.
Hindalco is one that is looking quite interesting. It's going to open a little bit higher. So any dip towards 231 can be bought. Stop loss of 427 on the upside. Targets of 237.48 by expiry can be seen.
All right. On to your calls, Dharmesh.
Yeah, top call for the day remains to be the Tech Mahindra remains to be at a target of 752 and a stop loss of 729. Second being again Ultratech Cement, we believe. I think the cement space should do good. West Cement again, Ultratech Cement a target of 44.20 and a stop loss of 43.40.
Okay. Thanks so much for that, gentlemen. Just stay on. We'll take in opening thoughts. Post-market open, 10 seconds left for the markets to kickstart trade. Remember, the Nifty Bank could be a key pivot. The last couple of days has seen some buying, likely to start off on a positive note today as well. Let's see what happens during the course of the day. About 1/3% for the Nifty and the Sensex. The Nifty Bank too, starting in almost the same vein. So not a bad start, in line with what the SGX was indicating. Bring up the mid caps and the small caps. I guess the mid caps would have started off marginally positive for the small cap index as well, about 1/4%. So not a bad start really for our markets. The heat map, more green than red on the screen, but maybe no runaway gains for almost any of the stocks. No big losers, that's the key thing. No runaway gains. Hindalco starts off a la yesterday as one of the top gainers. In fact, the top gainer right now. Some gains for Tata Motors, Tech Mahindra as well, which was, I think, one of the top calls from Dharmesh. Vedanta starts off about 1% higher. Not too many banks, save for IndusInd Bank in the top 10 list. And financial, actually now Kotak Bank too creeps in. So third or fourth straight day of positive moves for Kotak Bank too. But all in all, a fair bit of green on the screen, not enough red. Start off about 0.5% higher in trade. Before I hand it over to Devina for what's happening across the universe, just a couple of newsmakers and key trenders that I want to point out in trade. Firstly, the stocks which have gotten no interim relief, but no big reactions after the Allahabad High Court decision yesterday on any of the power names thus far. Let's wait and watch if that changes. For now, it's a fairly muted reaction. What about Jet Airways? Is it showing a muted reaction or is it a big one? No, not really a 7-8% reaction, just about a 3% kind of a fall into Jet Airways. And remember, it had gained about a couple of percentage points ahead of the results yesterday. So back to about 270, 272 odd levels. What about the companies which are trending in new highs in trade yesterday? VIP, not at an upper circuit, but still about a couple of percentage points higher. RBL Bank, a flattish start to trade, but Page Industries northwards of 36,000 now. In Page Industries, that's that one big mover over the last few days within this hosiery space and the undergarment space. But Devina, what are you spotting?
Well, it's the fertilizer pack that seems to be buzzing a lot in trade today. In the morning session, the opening ticks are extremely encouraging for Chambal Fertilizers, which is up 7% in trade right now. You've got GSFC, which is up 4%. You've got Deepak Fertilizers, which is up 3.5%. So a lot of interest building up there. And even for the sugar pack, for that matter, Bajaj Hindustan over the last few days has been buzzing. Today also, it's up about 5%. You've got Berlampur Chini, which is up 2%. So you're going to be watching out closely for that pack too. Suven Life carries on its good move. Remember, it's been a steady climber. Over the last week or so, the stock has really moved up. 275 on the stock. You've got a J&K Bank, Radico Khaitan, Inox Wind, PTC India, some moves there, about closer to 1% odd. Himmat Singh Kaseed, 0.75%. You've got Raymond, which is up. You've got Infibeam, a few other names like a UCO Bank, Shrey Infra, Praj Industries, 0.5% gains coming in there. Jet Airways actually not in the red, in fact in the green now. You've seen the stock already taking a beating, in the run up to the numbers. So probably already built in. So 279 on the stock, just 1% lower in today's session. No big moves. Zensar Technologies is up 0.25%. Soba, Bajaj Electricals gaining ground by about 0.25% apiece.
Interesting moves there. Just quick opening thoughts from our technical experts before we get back to Dhananjay Sinha. Gaurav, Bissa, the Nifty Bank, the last couple of days has seen some buying. Today, relatively muted compared to the Nifty or the Sensex. What's the trade here?
Well, it has opened on the expected lines, and the immediate resistance, as we mentioned earlier, that it's around 28,300. If the current level is sustained, I expect a decent amount of up move coming in. For somebody who wants to play in Bank Nifty, one can buy here, have a stop loss of 28,280 and play for it as of 28,500.
Dharmesh, sugar as a pocket, again buzzing.
Yeah, but not tracking much of a sugar space, okay. So would not be able to comment on this.
Okay, what are your opening thoughts on the market?
See, I think so. We believe, I think so. Again, the market is in an uptrend. I think so, and we believe, I think so. Any dip in today's for the intraday again, because after all this host of negative news, I think so. We see the market at the life high. We believe, I think, 11,700, 710 is a good level to re-enter for the market for the intraday purpose, for target of around 11,780, 790. So all in and all, I think so. It could not be for the day, or it may be extended for tomorrow. But I think so. The clear cut is the market is, I think so, in a very strong momentum, because if you look at the across the sectors, whether it's a banking or a metal space or a cement or a old economy or an FMCG, across buying is happening. So I think so it's not a single based rally which is currently going on in the market. Sector after sectors are getting churning. So we believe, I think so, things are positive for the market. We believe, I think so, positionally, if one want to go long, I think so one can go for a target of 11,925. Now to talk of the stop loss, I think so, to 11,450 remains to be the very strong support for the market. Unless and until we break decisively below or close below 11,450, we should not turn negative for the market, and eventually we should be remain positive, and any dip towards those levels should be looked as a buying opportunity going forward.
Thanks, Gaurav and Bissa, Gaurav, Bissa and Dharmesh Shah for joining in today and giving us your thoughts. Well, look at stocks which are nudging new highs. Page Industries, Piramal, Jubilant Foodworks, valuation certainly not a concern. Dhananjay, we spoke about this briefly post your conference as well as to what the mood was in the buyers' minds when it came to buying. We've seen this behavior in the S&P or the Dow. We're seeing this out here as well. That's those select 15, 20 stocks on the index, or maybe select 50 stocks on the BSE 200, which are finding favor. Not much else is really seeing consistent buying. Would you be in the camp which proposes further investments into a Page, into a Piramal, into a Jubilant Foodworks, a Bajaj Finance, or time to look at the beaten down names? Because corporate facing banks, for example, have made a bit of a comeback in the last couple of months. Can some of the other beaten down pockets start to doing that?
So I think, see, the thing is, it is possible that with the rally in the benchmark that has happened, there can be a lagged response in the mid-cap index also. So the mid-cap index has actually gone up by almost like 10% from the correction that we saw earlier on of roughly about 18 to 20%. So there is a sort of a pullback from there. I would say that the key issue would be whether the liquidity becomes so strong as to actually funnel back to the mid cap flows or not. That is a certain thing that will need to be looked at. If you look at the mutual fund net purchases over the last 3 months, I think that has averaged, including August, will be averaging about 5,000 odd crores. So I think the the flow of money into mid cap may not be as large as it used to be earlier on. So I think my bets will be largely in the large to large mid cap space and select stocks where there are sort of earnings visibility or there are certain macro themes to actually play. So I would not really go widespread in the broader market right now looking for value.
All right. Dhananjay, just comment on the metals pack and particularly Hindalco, if you're tracking it. The stock over the last year has been absolutely flat. I mean, global aluminium prices have been a bit soft, but the outlook there is also changing and slowly improving. Do you think this will probably help things to turn around for a stock like Hindalco?
So I don't have a very clear view on the stock per se, but the thing is that the metal sector has actually been under a lot of volatility earlier on. If you look at this year, there were this sector has been subject to trade conflicts, aluminium and steel in particular. So I think there has been a certain amount of volatility that has been there. Overall, I think the demand conditions remain positive both for aluminium and ferrous and non-ferrous aluminium and steel. And I think with that kind of scenario, it is possible that after the underperformance that we've seen over the last, especially with respect to the stock like Hindalco, and so there might be actually a comeback based on the outlook that is prevailing at this juncture.
Dhananjay, we just did a small piece in the morning about companies which have seen earnings estimate revisions post Q1. Now, very strange names came up in the upward revisions. DLF, for example, the highest revision upwards. But what I want to talk about is IT, because by and large, none of the IT companies have seen an upgrade on earnings. If at all, TCS, which I thought delivered a fairly decent quarter, has actually seen consensus earnings revised downwards. Now, in light of what the currency is doing as well, what would your thought process be about investing into IT afresh? What are you telling your clients to do?
So I think most of my clients are fairly positive on the IT pack. I think most of them are actually playing the currency impact. I think people are looking for overweight view on IT, and also to some extent on pharma names which have got very significant US presence and the impact of currency being very strong. So, but I think people are far more positive on the IT space where regulatory issues are not there. So there is a cyclical recovery, I would say, a modest one on the business front, especially in the US geography, and also within the banking sector businesses. So there is a sort of improvement that is happening there. So I think there is a positive view on that. Our choice in the large cap over there has been TCS. One can consider this rally can actually continue because we think that the rupee can further depreciate. So the currency is currently around 70 plus something. I think based on the fundamental assessment, I would say there is a further drifting down of rupee that one can expect, and with a strong dollar view that has been there, and the emerging market currencies being depreciating. So I think rupee will continue to be on the weakening side, and I think investors will continue to look at that space, possibly go overweight, remain overweight during the year.
You've held that view, Dhananjay. The last time around that you spoke, you told us about the 70 being a key possibility. We are there now already. Any time frames that you want to lay out to this currency call?
So I think, you can consider a sort of a 5 to 6% depreciation from here on as well. So, in the next 12 months or so, one can really look at that. Clearly we are seeing a strong dollar situation that has been there, and global liquidity has been tightening, and with respect to the fundamentals with respect to such as RER and interest rate differential, and also the fact that you have a widening trade deficit and current account deficit, which is expected to be about 3% roughly about 2.5% this year, but first quarter it will be about 3%. So I think all those things will continue to support a sort of a weakening dollar, and we see that RBI is far more open and comfortable allowing the currency to depreciate. So I think all those things are funneling into our view as well.
Are you watching out for what's happening in the oil and gas pack? Obviously, barring a Reliance Industries, the entire oil and gas index is in the negative by about 8% for the year. So your oil marketing companies have not been doing a whole lot. It's only Reliance, for that matter, that has actually lent some steam to the index and propelled the index to a level at what it is right now. So closer to about 300 odd points contribution to the Nifty. Do you see more steam ahead of 1300, or do you see probable consolidation, some profit taking on the stock?
So I think Reliance is also running up because of a positive view on the Reliance Jio performance, and I think there is a fairly strong guidance that has been given by the company in terms of business outlook. So I think that's what people are looking at, quite apart from the refinery and petrochemical business. So I think generally people are getting more positive and overweight on Reliance, especially when the rest of the oil pack is subject to uncertainty on how the oil will move, the under recovery, etc. The oil subsidy, the share of that being burdened on the oil PSUs. I think that is the sentiment that has been there for the pack. So I think within the oil sector itself, Reliance stands out. So I think we would maintain a positive view on the stock.
You just spoke about Jio, and I want to extrapolate that to the impact on the other telecom stocks. I mean, we recently had the subscriber addition numbers, which seem to be pretty weak for Bharti Airtel. What would you do with that space now?
No, we are underweight telecom space because of the competition that is coming on from Reliance Jio. So I think that competition will still remain. I mean, Reliance Jio is also talking about going into television space, so that broadcasting thing that they are talking about also has implication for the entertainment and media industries as well. So I think Reliance is permeating across telecom and widely across the broadcasting space as well. So I think it is creating a sort of a disruptive impact on the existing players across this segment.
Interesting. Dhananjay, final question from my end really, and that's on the QSR space. Now, Jubilant has been nudging new highs. I don't know how closely you track these or your house tracks it, but just a brief word here. Jubilant at new highs. There were reports about how Westlife could continue to clock in same-store sales growth of 13 to 15% over the course of the next few quarters, really. It's a narrow pocket, but a pocket that is preferred by a lot of investors. Do you have views here?
So I think Jubilant has been not just the fact that there is some macro story out here that there will be more spending, all these things are there, but I think there has been a certain structural change that has been happening, strategic change in terms of how they are trying to improve the earnings through increasing margins, value addition, etc. Quite a departure from earlier strategy, which was gaining market share or increasing volume. So I think the focus is clearly on profitability as well. So I think that is what has resulted in the re-rating of the stock, and I think that change in strategy is reflected. So I think a lot of steam still remains in that space.
All right. Dhananjay Sinha, thank you so very much for joining us. Really appreciate you taking out the time and sharing your views here on the show. For the indices, we're looking strong, up about 1/3% on both the Nifty as well as the Sensex. 38,800 on the Sensex, with the Nifty at 11,727.
Yeah, the Nifty Bank dips into the red though ever so marginally in trade. Let's see what happens during the course of the day. Take a break. On the other side, we discuss the outlook for VIP Industries with Chairman Dilip Piramal. The stock is nudging new highs. Parag Shah of Infraconstruction also joins in after the subsidiary bagged an arbitral award from the Maharashtra government. We talk about the realty space at large in the Mumbai and the region with Infra. That's coming up as well.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
Kerala is tiding over the worst calamity that the state faced in a century. The intensity of the calamity and the losses suffered thereby are unparalleled. A preliminary assessment pegs the loss at around of rupees 20,000 crores. It is a humongous task to undertake various tasks of rehabilitation and reconstruction. Only with the wholehearted support and cooperation of all of you, we can rebuild Kerala. Your contribution, however small, will go a long way in achieving this goal. Please contribute to the Chief Minister's Disaster Relief Fund. We shall overcome.
Back with IndianOpen right here on Bloomberg Quint. One Infraconstruction subsidiary has just won an arbitration against the Public Works Department for a road widening project in Pune. The parent in the meantime has also won another project from the Pimpri-Chinchwad Municipal Corporation to build houses under the Pradhan Mantri Awas Yojana. Joining us now to talk about the arbitral award and the new project and lots more is the company's managing director, Mr. Parag Shah. Mr. Shah, good morning. Thanks so much for speaking to us at Bloomberg Quint. This is Neeraj here. Good morning to you. First, let's get the news flow out of the way. Then we talk about how business traction is. Can you tell us about this arbitral award? When does the money come in? And does this give you any kind of relief from the woes that would have been there in the project?
So we got the arbitration award in one of our subsidiary company called Manaj Tollways, where Infra is a 64% shareholder. The award we just received last week, so the process has started and we expect the money should be in within next 3 months' time.
Okay. And what was this arbitration all about, and would this money be used for other projects? I mean, how does this work?
Yeah, out of this, the 77 crore rupees was a bank loan, So first that money will go into the balance money, then we'll definitely be able to deploy in new projects.
Okay. I believe the nature of the order wins that you've had, Mr. Shah, has changed. I remember a few years ago you were a pure play construction company, then you got into in a big way into building your own houses or own real estate projects as well. In the month of March, you won an order from the Pimpri-Chinchwad Municipal Corporation for presumably making a low-cost housing construction order as well. Can you tell us what's the current breakup of revenues between the 2 or 3 lines of businesses that you would be in currently?
So basically the company, the business profile has been divided into 3 parts. One is the real estate sector where we develop our own projects, either in some partnership projects with other developers or we are doing on our own. So in real estate projects, we have somewhere around 6 million square feet projects in hand. Some of the projects have started and some of the projects are about to start in maybe next 2 months' time. The second sector is the port sector, which is our niche area, and we just completed the PSA project, which was somewhere around 900 crore rupees job, and we recently completed last month ahead of the schedule again. The third sector is the residential construction and the government housing, which this Pimpri-Chinchwad is part of that.
Okay, and how large is that segment?
So we have external EPC. We have external EPC contract jobs in hand, approximate 500 crore plus right now. And our own projects, which is around 6 million square feet. So approximately, if you count in terms of EPC, it would be somewhere around 2,000 crore rupees. But we don't treat it as an EPC because we ourselves is a developer and we have an in-house facility.
Okay. Interesting. So let's talk about each of these businesses. Since you start off with this EPC stroke, making your own in-house facilities and your own projects, how is that pie of the business shaping up? How much does it contribute to revenues in FY19 as a year? And what's the growth prospect there?
This year we are very bullish, mainly because of this award also definitely about this Manaj Tollway, which we have been waiting since almost 2 years. This year and next year is very promising for a company like us, those who doesn't have a debt or almost a zero debt. We have an in-house facility of constructing the buildings. We have no other past liabilities. So we believe that the next 2 years we should be able to grow very fast.
Okay. This you're talking about the EPC business. Now the Q1, correct me if I'm wrong, but the Q1 EPC revenues were down about 30% at about 111 crores versus 157 crores on a year-on-year basis. Do you see that aggressively changing in the quarters ahead?
No, actually it's not down, but yes, definitely in the balance sheet it will look down because wherever we are doing our in-house projects, where it's on a PMC basis, so my turnover doesn't book, we charge cost plus basis. So if you will see, the margins must have improved, not the turnover, because the in-house company, we don't do the billing of EPC. So we do cost plus profit.
Okay.
So our bill comes only of a professional fees bill.
Having said that, what's the overall division revenues that you expect from this business for FY19?
See, the FY19, definitely the real estate turnover we have started booking. But still this financial year, because all large projects are starting now. So as per the accounting standard, the turnover will be started booking from next year onwards on a real estate side.
So am I understanding this correctly, Mr. Shah? You believe that while EPC might do well on the margin front in FY19, the real bump up in revenues for you as a company because of the real estate division bookings will only start FY20 onwards?
You can say yes.
Okay. And until then, what happens for the remaining 3 quarters? The reason I bring this question up is that if I look at the last 4 or 5 quarters, you had revenues of about 178 crores in Q1 FY18. which had a dip to about 96 crores in Q2, then has been erratic, 165 crores quarter 3, 222 crores in quarter 4, and Q1 FY19 you again had about 134 crores. So it's been it's been all over the place, so to say, or it's not been consistent. Let me rephrase my question. Do you believe that for the next 3 quarters consistency might be difficult to achieve? It will only come in post the beginning of FY20?
See, in a EPC, sir, in a EPC business or in a contracting business, I never believe that there should be a consistent turnover quarter on quarter. It cannot be. Depending on the season, it depending on the types of order, it depending on the product which you are constructing. So it cannot be matched quarter on quarter, but we have to see the yearly. Like last year we did, I think, somewhere around 30% plus growth. This year we believe 50% plus growth, and which we are continuously, we have been able to achieve.
Okay, interesting. The last time that we spoke to you, Mr. Shah, you had mentioned that the high rate of GST would be a deterrent for buyers in the real estate portfolio. That was single biggest concern of yours. However, now buyers are now warming up to those rates.
Yes.
And would you believe that sales in the real estate division, even not, forget your large projects, but the mid-sized projects that you already have on board, will you able to clock in some healthy sales for those projects despite the GST rates for the remaining 3 quarters?
See, now the general trend today for the construction industry, I'm not talking about the Man Infra only, but generally the booking comes at the time of foundation, when you launch the project, and then maybe 10% sell during the construction, but most of the product you have been able to sell post OC only, because the 12% GST is a big concern for the customers. The cost is increasing very high. So this model is changing. The developers, that's what I mentioned, the wealthy people or the company, those who are debt free, they will be able to do better job. We are still a zero debt company, and we are still sitting on more than 150 crore rupees cash right now. So the product, if you have been able to deliver on time, your past track record says we have been able to sell, but overall market is very, very down as far as the GST is concerned.
Okay. And you don't expect this to pick up meaningfully in the next 3 quarters?
I expect definitely, but that's not in my hand.
That's not in your hands. Okay, my final question, Mr. Shah. Your company has a fair amount of goodwill within the space that you operate in on the real estate division. What companies like Godrej Properties have done very successfully is change the model in a way that they are not incurring the cost for acquisition of the land, but entering into JVs with either existing builders or landowners, and therefore the ROI on the projects are very high. You've embarked upon a couple of projects like that. Do you think that's the nature of the work that you will have going ahead, and therefore on whatever sales you clock in, would you believe the ROIs for your real estate division would consistently move up over the course of the next 3-4 years?
Yes, definitely, because that has become the operation system of the real estate. Nowadays, if you will see, most of the properties are not on a sale. It's on a DM model or a joint venture model only, because such type of large capital is not possible to invest right now for any developer, not only Man, for any other developers. So most of the deals have started on the basis of revenue sharing.
So ROI moves up in the
and that will
ahead?
Definitely give a better ROI. Yeah, ROI definitely should go
Can you
up.
share some levels, Mr. Shah?
But we are still pardon?
Can you share some numbers, some vision of where the ROI of the division can be 3 years out?
It's difficult for me to say right now offhand, but see, we are doing around 4 million square feet, around 3.8 million square feet at Daisar, the project we are launching in the month of October. That is on a joint venture model. So we have not purchased the land over there. We are doing some of the MADA redevelopment projects, which is around 12 lakh square feet in Ghatkopar and Vikhroli, which is also we have not purchased the land. In our book, only the land purchase we had at Mulund, that was also years ago. We had also not purchased any recent land in last 4 or 5 years.
Okay, difficult to share some numbers, but hopefully the ROI will move up. Mr. Shah, thanks so much for taking the time out and speaking with us today, and all the best for the quarters ahead.
Thank you.
That's Man Infra, hopeful of recoveries coming in from FY20 onwards. The EPC division could do well in FY19 though. What is doing well though is VIP Industries, both on the fundamental front and in terms of the reward that the shareholders are giving it. They've seen robust top-line growth aided by all 4 key brands in the first quarter earnings. With the upcoming holiday season, will the companies maintain its sales levels, or will the depreciating rupee have some bearing on the company's financials? Let's ask Mr. Dilip Piramal. He's chairman at VIP Industries, joins us on the show again. Mr. Piramal, good having you. Thanks so much for joining in. Albeit we're talking a bit late, but congratulations on a very strong quarter. I'm not surprised really, but share us some details or some highlights as you got a chance to reflect upon the quarter gone by, and how does this augur for the quarters ahead?
Well, as I have said earlier, that we are doing well on all fronts. That all our brands are doing well, all our channels are doing well, our products are well accepted, and the Indian economy is doing well. So it's a combination of everything, and that is resulting in a very good performance. When the sales growth are more than 20-25%, the margins really shoot up, and we are getting the benefit of that.
You had mentioned in our previous interaction with me, and I'll cite some of these examples in this current interaction, Mr. Piramal. You had mentioned in a previous interaction that Q1 is usually the strongest quarter for you due to the wedding season. You've clocked in about a 30% sales growth. I'm guessing it would be difficult to reenact this kind of growth on each of the other quarters.
Let me correct you that Q1 is not on the wedding season alone. The main driver is the travel boom. It's the holiday season, it's the vacation season, because it's the longest summer vacations in all parts of the country, through April to June is the holiday season, and that is the biggest driver of our business. Wedding is the second. So it's not only that, it's not only wedding season, you are emphasizing the wrong thing. And to answer your other question is that the growth is on the basis, like the first quarter is good in every year. So even in the last year, the first quarter is the biggest quarter. So the next quarter, the sales will be lower than the first quarter, but the growth rate might be the same. So, but also we have to remember that last year we had, especially in the month of June, we had the impact of the GST introduction. So June was a poor month. As also during July, August, September, there was a little bit of uncertainty, and we had 28% GST at that time, which was reduced to 18% only in November. So the first half saw a lot of uncertainty because of the GST introduction. So we had a slightly lower base, which probably is not there in the third and fourth quarters. But overall, all things considered, we have definitely gained from the unorganized sector. The entire industry, because all our other the two major competitors are also doing extremely well. So it is a good thing for the organized sector, and I think the momentum will continue.
Yeah, I also remember a line, maybe not verbatim, but you mentioning something to the tune of how the economic conditions in India have never been better for you in your memory at VIP Industries. I would reckon that the momentum continues into the quarters ahead.
Yes, of course. I mean, the economic conditions are not restricted to one quarter. I mean, you see, India is on the growth path. In fact, I have been saying this since the 90s that if we follow good economic policies, we are still one of the poorest countries in the world, and we are in the bottom quartile of the world's population in terms of economic growth. So we have to go forward. If we follow good policies, there is no holding us back. And also we are aided by a strong economy in the world. So like we should be what we can. China is the best example for us. We have to follow China. And today China's per capita income is about 8 times that of India. True. So we have a lot of potential.
Okay, I want to talk about specific brands as well, Mr. Piramal, but just before that, if indeed the sales volumes, even on a quarter on or a YOY basis, will continue moving up, are we to assume that the new normal for the operational metrics would be higher than where it is right now? I mean, Q1 you've done phenomenally well on the operating profit margin front. What would be an average new normal for you as a company?
Again, it is very difficult to give an exact figure because see, our overall EBITDA is only in the region of, it varies between 12 to 18%. And so that is not very large. I mean, if we have something like 40% or even 30%, it would be more easy to predict this. But when your overall maximum margins are about 16-17%, then even 2 or 3% makes a big difference both ways. When your volumes go up, then they can increase also. So I think we should be in this similar margin band. We should continue.
Okay.
Because sales growth is very good. So once sales growth is good, we can take care of the other increasing costs, etc.
Interesting. In the opening remarks, you mentioned about how the sector at large is growing at the expense of the unorganized sector. But channel checks also seem to suggest that you are gaining market share from your competitors too, Samsonite as well as American Tourister. So how is the market share scenario shaping up? How different it is from what it was maybe 12 months or 18 months or 24 months ago?
Maybe we have gained a few percentage points, maybe 2 or 3 percentage points. But in fact, I think the maximum, our other competitor is also doing quite well. So it's not that we have taken too much from the unorganized sector. I also feel that the overall market size has increased. You see, what happens is when the economy grows, and with this sort of growth, a lot of consumers move from the unorganized sector to the organized sector, that is from unbranded to branded goods. But the overall market also increases, so the penetration increases. So even the unorganized sector must be doing quite well. And people who have so far not been consumers of luggage would be entering. And that is how the market sort of pans out. In a growing economy today, our penetration, I think, wouldn't be more than 25 to 30%. So that will increase, and the beginning is always in the unorganized sector. Whenever any product can be made both by the organized sector and the unorganized sector, this is the case. There are two separate market segments, two broad market segments, and one doesn't really impinge on the other, except at the very low price points. But I don't think, I think both the sectors are quite independent of each other.
Would the same be true for backpacks as well, Mr. Piramal, for the sector I'm asking? Because that is essentially a lower price point, but is the organized sector seeing robust growth there?
Yes, yes. Yes, absolutely. I think, in fact, that is where we have probably gained the maximum, because you see, the smaller the item, the more it is amenable for the unorganized sector. But because our brands are so strong, particularly in backpacks, our Skybags brand is absolutely amazing. And our campaign with Varun Dhawan has really been doing extremely well for the last 3 years. And we continue to come out with very good products. So in fact, that is where one of the bigger drivers of our growth.
Interesting. My final question, Mr. Piramal, is on the currency, and how does this rupee depreciation impact you as a company?
See, we got to realize that the rupee depreciation is not so much a rupee depreciation as the strength of the dollar. And that strength is also reflected in, let's say, the Chinese yuan. So the Chinese currency also has depreciated. So to that extent, and when we buy from China, we try and take advantage of that you are also getting more money for the dollar. So we try and see, and because of our strength of buying, we are the second largest buyer in China of luggage. So, and we have been the only company which has been constantly increasing our volumes in the last 8-9 years. You should remember that when the consumer crisis took place in 2009, the Western economies were really doing badly. And for many years, they were not, there was a recession there. So we were the main buyers, and we are very, in fact, our sales, our purchases from China are going up. year by year, our rate of growth is also very good. So we have a very strong commanding position as a buyer. So we are able to contain the costs better than our competition.
Okay. Well, seems like the trend is strong. Hopefully it stays that way for longer than what you're envisaging, Mr. Piramal. Thank you so much for taking the time out and speaking to us today at Bloomberg Quint.
Thank you.
That's very confident, Mr. Dilip Piramal of VIP Industries about the outlook ahead. Not without reason, I guess. The market's doing okay, about 0.25% higher for the Nifty. The Nifty Bank, though, after 2 days of gains, has slipped marginally in the red. All of these and the stock-specific queries and pointers being taken up on the FNR show that's coming up next. It's a wrap on this leg of Indian Open. Thanks so much for watching.